Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra. Hi. Brand new week of Midcap Radar. We've got so much packed for you this week. Let's get started with the top headlines. The market's near the day's high after a weak start. Midcaps underperform. Financials, energy charge ahead. Realty, metals slip.
Electronics Mart builds on listing gains after a bumper debut. The consumer durables and electronics retailers stock listed at a premium of about 50% to its issue price.
Butterfly Gandhimati dips after sales and profits decline. Oberoi Realty loses ground after cash flow slump.
BLS International gets a fillip after ace investor Shankar Sharma buys stake in the visa services provider. All right, those are the top headlines, the market moves and specific stocks about which we'll talk in greater detail. But for the markets now, nearing the day's high led by the Bank Nifty. So Nifty is up 133 points as we speak. We also have the Bank Nifty, which is outperforming the benchmarks. That one is up 1.5%. The Midcap Index, which was struggling a bit, has managed to be in the green. The advanced decline ratio, though, in favor of the declines. Right now, that index is up 0.2%. We did get a weak handover from the global markets, but we have seen some recovery, and we are definitely not doing what the global markets are suggesting. The US markets, of course, big cues coming up there as well. But for now, we are managing in the green.
For now, we're managing pretty well, right? Just not in the green. We're up about 0.8%. But there has been a reversal in markets like Hang Seng.
Yes.
Hang Seng at one point of time was down over 1%. Now it's up close to about 0.6%. So there has been the U-turn in sentiment coming out of Hang Seng. The key level right now to watch will be last week's high. In fact, the high that we hit last week was 17,348. So we're about 30 points away from that level. From there, the markets had slipped close to about 180 points towards the close of trade. So watch for that level of 17,348. That was the high that the markets hit last week. Let's see whether we can conquer that. And thereafter, the level to watch will be the 50-day moving average, which is closer to 17,450. But let's talk about our mid-cap mover segment. Vivek is here to get us through the mid-caps that are moving around in trade. Hi, Vivek.
Well, good afternoon. Finally, you're seeing the mid-cap index catch up. And today, some of the stocks especially are doing very well in the session on very good volumes as well. The first stock on the list is IRB Infra. Now, Ventura Securities has come out with a very interesting note. They have a target price, they have a buy, and they have a target price of close to 730 rupees a share. And this is something, that the market is taking note of. So what Ventura is saying is that, the management has strategically deleveraged its balance sheet via multiple InvIT models, and which is why they believe IRB InvIT is very well poised in order to gain more traction as far as the road space is concerned. Craftsman Auto, this particular company declared its results just some time ago. Encouraging set of results with strong profit growth seen, and which is why today you're seeing the stock gain. Now, the other one, of course, Aptus Value Housing. This particular stock, the volume buzzer, strong volume seen in this particular name. Just dial on the back of strong traffic growth, both YOY as well as on a sequential basis, something that's doing quite well. Adani Green today is another stock that's gaining over 4%. On the other hand, J. Kumar Infra, if you're talking about this particular name, today surprisingly seeing a very strong sell-off on strong volumes. It'll be interesting to see whether there are any corporate developments here. Power Mech Projects 2 is seeing quite a bit of a sell-off. On the other hand, two smaller NBFCs that we're looking at, Credit Access Grameen, while it has recovered a little bit off the day's low, this particular stock saw quite a bit of an intense sell-off in the first hour of trade. Home First Finance as well as Nuvoco. Nuvoco, again, some of the mid-cap cement names today are seeing quite a bit of a sell-off on the back of weaker results from Shree Cement.
Okay, all right, Vivek, thanks a lot for joining us, taking us through those names. It's time to get a technical check on the markets. Interesting moves out there. Let's welcome Himachal Gupta of Globe Capital for just that. Himachal, good afternoon. Thanks a lot for joining us. Well, we've seen a substantial recovery from the lows. Markets are at the day's high. We're definitely not looking at the global markets. There's some recovery in Asian markets as well. What are the charts suggesting? Is this some pre-Diwali rally that we are looking at?
Very good afternoon to you. And yes, in fact, this seems like a pre-Diwali rally, which was much awaited. And actually, I would say that this rally is an extension of the rally that we saw on the Friday, where we saw some kind of profit booking after a huge gap up. But in today's session, from a crucial support of 17,100 odd levels, which happens to be a very good critical support zone, we have seen a good buying in Nifty. And more importantly, the follow-up is coming from Nifty Bank, which is actually leading from the front in today's session. So my sense is that yes, at least in the short term, the trend looks strong and it's a buy on dips market. Since we are already up nearly 120 points for the day, and from the day's low, we are nearly up 200 plus points. So I think a prudent strategy would be to buy on dips. If you are holding on to the long positions, I think a trailing stop loss below 17,240 can be placed. For fresh longs, I think a dip towards 17,260, 280 spot levels is a good level to start entering into the long positions on the Nifty. On the upside, I think from a 1 to 2 days perspective, it looking like 17,500 is coming, and I think this is something that should be targeting for the long positions in Nifty. Nifty Bank again looking very strong in today's session. 39,650, 39,700 is the zone to enter fresh longs. Keep a stop loss below 39,600, and 40,000, 40,150 are my targets for today or a BTST trade. So both of the indices are looking very strong, and a buy on dip strategy is recommended on this indices as of now.
Okay, Himanshu, that is the strategy for indices. Tell me about individual stocks that you're betting on.
Yeah, sure. So going with the buy recommendations on a couple of stocks. The first one is a buy on City Union Bank. Great looking chart after a decent consolidation. The stock is looking on the verge of a breakout, and even in the volatile times, the stock has managed to hold its grounds. So CUB is a buy around current levels with a stop loss below 188. Targets of 200, 202 can be expected in a day or two. Second one is a buy on Bajaj Finserv. Now here also we have seen some kind of consolidation and a retest of an important support zone close to 1600, 1650 odd zone. I think above 1700, a breakout here can also be seen for a target price of 1760, 1780 odd levels. Keep a stop loss below 1685, and a long can be initiated on Bajaj Finserv. Finally, pharma as a sector is actually showing some signs of strength after a long consolidation. So a cash segment from here, FDC, that's a good looking chart to me. And I think a rally of close to 8 to 10% can be seen here in the immediate short term. So FDC is a buyer on current levels for a target of 320, 325, and a stop loss below 288 can be placed here.
Welcome back. You're still tuned into Midcap Radar on CNBC-TV18, and as promised, cement and tire maker Kesoram Industries is on our radar after its Q2 results. The company saw losses widen due to weakness in its cement as well as rayon and chemicals business. Note that it took price hikes over the past few weeks and is also set to take some strategic actions as well. To talk about all of this, P. Radhakrishnan, the whole-time director and CEO of the company, is joining us now to discuss this and the earnings outlook as well. Mr. Radhakrishnan, good afternoon. Thanks a lot for joining us on CNBC-TV18. I was just looking at your numbers, and the first thing that I wanted to ask you is your volumes. Halfway down the mark, volumes are at 3.2 million tons. Do you think you'll be able to hit that target of 8 million tons by end of this year? Because halfway also, it's lesser than what you had guided for.
Good afternoon. Yeah, we should be close to 7.5 on a conservative basis. 8 is will be a tough task, but it is not unattainable. But conservatively, one can say 7.5 is what we should be clocking close to.
So in a way, sir, this is a downward revision to your volume guidance, right? What do you think is the reason for that? And can you talk about the price hikes that have been effected in the last 2 or 3 weeks?
Yeah. So if you look at overall, the prices have, the costs have gone up. For us to cover the overall cost for the entire industry, it has gone up. 75 rupees per bag should be the increase. You compare month on month between last year and now. In the recent past, yes, the prices have been up and down, but nowhere it has touched 75 rupees increase per bag. We have the price increase in the last couple of weeks, as you asked, has gone up by 15 rupees or so, depending on market to market.
Okay. And you're saying there is a case to increase it further by 60 rupees?
It's ultimately the cost, and either the costs have to come down or the prices have to go.
So right now the mismatch is 60 rupees per bag.
Close to 60 rupees per bag. You're right.
Okay, so what would this do to EBITDA per ton? Calculated EBITDA per ton in the cement business is approximately 400 rupees. You had guided for 600 to 650. By when, or will you be scaling that guidance down as well, since you're talking about cost pressures?
So somewhere between 425 to 450 is what, given where we are at the end of the half year, is what would be the target, somewhere between 425 to 450.
So we will not be taking, as you were talking, there's a 60 rupees mismatch in pricing as well. So do you think that is something that you'll undertake in the second half? Because from 600, you're not talking about 425 to 450 rupees per ton of EBITDA as guidance. That's a big decline that we are going to see. Any sort of...
I'm not saying, I'm not saying per ton of EBITDA. Second half we are at 400.
Okay.
Second half we should be doing 700 rupees EBITDA per ton. Right? That the overall EBITDA will be 425 to 450 crores as against last year about 587 crores.
Okay, I'm talking about EBITDA per ton, Mr. Radhakrishnan.
EBITDA per ton second half should be 700 rupees per ton.
Okay, got it.
And so what will drive this increase to 700 rupees per ton in EBITDA per ton from the current 400 rupees?
The combination of price increase and softening of fuel prices.
Okay. What's the updated debt number and how much have you repaid so far?
Or debt on the
debt
side.
number.
On the debt side, we have during this quarter we have repaid 90 crores of our optionally convertible debentures.
Okay.
And what will your absolute debt stand at post this?
1650.
1650.
Okay, so the 1650 is by the end of this year is the debt number that you're looking at. What about cost of debt? That is something that you have been willing to bring down. Earlier it was near 19%. You've been planning to bring it down to low teens, but we are in a different scenario when rate hikes are concerned. What is the outlook here? Because your finance costs are also very high.
Yeah, so the absolute debt coming down will bring down the quantum of finance cost. Plus we expect to refi this entire 1650 somewhere around 11 to 12% or close to that by 31st March. That is our endeavor.
Could you tell us, current debt is 1650. In the next 2 quarters, by the end of FY23, what could that number come down to? How much are you hoping to repay?
There are no repayment obligations.
Okay.
So we will, whatever is the cash generation, which will go to service interest and augment the working capital.
Okay.
And we'll refi this entire debt. Yeah.
Okay. So last question before we let you go. When does the rayon business turn around? When does it return to green? What are your plans here in terms of demerger? You've been speaking about getting a strategic investor as well here, ready to sell it at the right valuations. Any update out here?
So the demerger process, the timeline is 31st. By the end of this financial year is what we are trying to do. Meanwhile, there are some corporate actions which we are endeavoring to for infusion of capital into that subsidiary. So when it is crystallized, we will definitely come back to you. We hope it gets crystallized soon. That's where it is.
Okay. All right. We'll speak to you when things are finalized in this direction. Good luck with the future plans for the company as well. Thanks a lot for joining us and speaking to us about business's outlook as well. By the way, ACC's numbers at the bottom of your screen, and it is looking like a big miss. Of course, there would have been some sort of adjustment that I'm watching out for. Net loss is coming at 87.3 crore rupees versus a CNBC-TV18 poll of 110 crores. And even revenues, they are largely in line with estimates, coming in at 3,987 crore rupees versus a poll of 3,900 crore rupees. EBITDA, however, a big miss at 16.5 crore rupees versus poll of 273 crore rupees. Just trying to look at the numbers in the press release as well. Rima, have you gotten anything? Because it looks like a big miss even on the margin front, 0.4% versus a poll which is much higher. Anything that you've been able to go through?
No, I'm just trying to open that number to see if there is an exceptional. But just to put that decline in context, same time last year, margins of ACC were closer to 19 to 20%. So from last year's levels of 19 to 20%, margins have come down very significantly. Just trying to see if our team can put out some more updates on what's led to that. There has been a very sharp increase in the cost of materials consumed. So that's gone up by nearly 45 to 50%. So that explains so high raw material pressure is hurting the margins. Even the purchases of stock in trade. Employee expense is static. Power and fuel costs have doubled. So power and fuel costs have gone up from 787 to 1,300. So it's a combination of raw materials, very high fuel inflation. These two appear to be the principal reason why the margins have actually come in significantly lower than what the street was anticipating. There is a small exceptional, I think, of about 16 crore, 16.25 crore towards special incentives for certain key employees. So that seems to be one exceptional item, but that's just about, you know.
It's okay. We'll just do one thing. We'll go through this in greater detail before talking about the numbers, and we'll get Nigel in to make us understand what's happening here. We'll slip into a short break now, and we'll get back. But here's some news for investors. You can now track US market actions real time on Money Control. Log on to Money Control website or app and stay informed about all that matters in the global markets.
Rima, we don't have the volume number as of now, but clearly it's a big miss. And by the look of it, the top line is bang in line. We don't have the volumes as of now. So it appears that, the top line is not a worry. The problem is in terms of the cost and power and fuel costs. That's up by close to around 67%. The other point is the absolute power and fuel cost on a sequential basis, it's not cooled down at all. There were some hopes that maybe there'll be some cooling off. So it's coming at around, 1,317 crores. That compares with around 1,312 crores odd. So that's a bit of an issue. Remember, the street was bracing for a rather weak set of numbers, and they are so weak. But the other point is on the smaller part of their business. That's the RMC business. If you just look at the line item out there, on the top line, on a year-on-year basis, the revenue has grown. It's coming at around 350 crores, which compares around 305 crores. However, the EBIT front, well, it's come down from double digits. That's from around 11 crores. It's come down to around 2 crores. So a smaller part of their business, which constitutes closer around, a little more than 10% of their business, well, that one has struggled, and it's just broken into the green. So a few reasons why, in fact, these numbers are pretty weak. One is the costs have spiked up, including the power and fuel cost. On a sequential basis, there's no cooling off whatsoever. A smaller part of their business, that's the RMC business, well, that's almost delivered a loss, actually. It's only 1 crore in the green. And, the stock has been rather weak as well in the last few days. What could support it at lower levels is that on a valuation parameter, it trades at around $115 per ton, which is almost at replacement cost. And also the street is hoping there'll be various measures in the coming time that will help them turn around. So valuation support, but these numbers are very disappointing. Back to you.
Interesting price action, right? And ACC, first there was this dip, the stock fell post the margin miss, but now it's recovering and it's seen a pretty sharp rise in the last few minutes.
Yes, that's surprising. So of course we'll get in more details. Cement stock numbers, they are coming in continuously. So we'll do that for you. But for now, we'll take your leave on this edition of Midcap Radar. More action on the other side.